morning. Good morning. So I'm looking for a buy on Goldie. If we can break above resistance, I'm thinking about just leaving my stop loss within the range. I think that should be a pretty decent stop. Just below here, that's gonna be within this range. See price, we got a resistance and we got a support. So if I'm taking a buy and I'm expecting price to continue moving up, I'm not expecting it to come back into this range, correct? Because if we come back into this range, this is like a no trade zone. So what I'm going to do is I think this is a pretty valid stop loss. I mean, you could bring it here, you could bring it here. But what I'm really anticipating is this bullish momentum that we're getting from Powell's speed. No, wait, what was this? I think this was a Friday move, right? Oh, this is just Monday? Man, that looked like the Friday move. Holy. Yeah, man, look at this. This is that bullish exuberance I'm talking about. So, oh yeah, this is, let's see what happened yesterday. So price moved up. We consolidated. Okay, we got some sell-offs here happen. Possible liquidity grab situation that happened here with a V-shaped reversal during Asia. Now we're broken into an accumulation right here. So we're trading above the daily. Right now, the daily is up 0.30%. Once we break these highs, we should be up 0.40%. And that's where I'm going to be looking to get stuck into a bullish continuation in line with the overall exuberance that we're seeing in the market. So I think it's a pretty good idea to have a stop loss within that range, within this consolidation. Because if we break these highs, I would really like to see volume come in and just fill this range on the left hand side, whereby we have, like, you know, clean traffic. Here on the left hand side, we have a range of about, you know, like 58 pips to move up towards 33.84. So I think it's a pretty clear cut entry over here. Really nice entry this is. Really nice entry this is. So now I'm gonna wait. Man, this trade should not give me drawdown. That's how good it is. Like, it should not give me drawdown. If it gives me drawdown and it comes and takes me out and then goes up, you know, whatever. But I think the stop loss here makes the most sense. I don't want to waste additional pips here. I mean, you could be a little bit safer. You could be a little, yeah, and you already had the attempt to come down, so you should try the highs. Makes sense. Yes. Also got a small little fake out situation here. Exactly. Back into consolidation. So how do you guys think? Good stop loss? Or should we go safer stop loss? I want to see what y'all think. Good stop loss, or do we need a stop below here? So we got two options for stop loss. We can put it under here. So we got option 1 and we got option 2. Option 1. This is option 1. This is option 2. What do y'all say in the chat? Option 1. Option 2. What are you guys saying? Small stop loss since we have dynamic support below. Got some SMAs. And then Candlesticks should be closing here in about 20 seconds, creating another support because it's retested this zone once. It's retested this zone once. It's retested that a support. So let's see. Let's see if it holds. Let's see if we can get my confirmations here. Come on, Goldie. Skyrocket. I'll put option 2. Because this thing I'm expecting to even continue pushing upwards. Like if this thing breaks above those highs. Yeah, I'm expecting that daily, man. We even got some clean range there on the daily to continue moving up towards 33.97. Still gonna be having that. You remember we spoke about 3400 area here as a psychological mark that we're gonna be looking for price to continue moving up bullish. I hope London could just move up. Like there's literally no trade down here. I'm not looking for any sells. The moment I'm feeling a lot more confident with the buys. See, it's finally taking out that support. Yeah, I think I'll go with option 2. SL, manage on a swing entry model. Panda, thank you for the sub. What's your risk to reward ratio? 0.1. I joined the mentorship today. Anything to know? I think you just gotta go through, most importantly, go through the database. Go through all the videos that we have. And then just get up to speed with the videos, you know, look at the simulations, look at our concepts, look at the way we trade. And just make sure you go through the WAP database. Everything is on there that you need. You can get your Discord roles, the Telegram roles. Everything should be there. But before asking too many questions, just make sure you explore it a bit more. Like go on the Discord, look at the private channels. You know, we got all the information there. But welcome BC Drums. All right, chat. Let's see. How we doing today? This is Tuesday, second day of the week. Week's coming to an end here. It's the last trading week. Let's see. For the quarter, we still have one more month, five days for the quarter. Price has just been skyrocketing, as you can see, for the most part. If you eliminate all the noise that's happening on the LTF, you'd see price has just been moving up over here. Look at this. Crazy skyrocketing on Goldie. I hope London gives me this buys. Honestly, chat. Honestly. I don't see why it has to calm down. Like, we try to calm down already here, Asia. It rejected. Maybe it tries again for the London session. Take out these lows. I think just if it comes down, it's just going to be looking at correcting some of this move, I suppose. Which is crazy. Anybody know why this happened? Somebody in the chat said some Fed got fired or something. I'm not sure about that. But yeah, crazy move. Anybody sure why that happened? Maybe it's just an exuberance from what we've been anticipating from the market. See buys here, and then you got people who are like, oh yeah, we're definitely going to move up. We're still going to move up here. Let's change this to waiting for entry. FEF Fed cook got fired. Oh, really? Someone actually got fired. That is what I'm looking for, the correction. Okay. I'm looking for the continuation. But I want the daily to show to me that it's trending a bit first. That's going to be above 33.79 over there. Because then I can say that price moved up today. And then it retraced. It took a pause. So it can continue to move up bullish. And then that's going to be the idea for the trade. But if it moves down, then you're just looking for correction. Because now you're basically saying price moved up. It moved sideways. Instead of a bullish continuation and a trending day, now you're just expecting price to kind of correct this move. Stay within the consolidation. So you see, you have those two options. Two perspectives of looking at markets currently. So I see it is taking out the lows. We're going to need to adjust those stops. Same levels as yesterday. More or less, we're a little bit higher up. This was yesterday's PA down over here. And that's the highs of the New York session. So it's kind of like a break and a retest situation of the New York highs. Fed Cook is not fired yet. There will be lengthy procedure even if allegations approved. What did he do? Let me see on my news. Was there anything? Investors are now waiting Fed, PCE. Okay, Fed Power last Friday signaled possible rate cut. Man, I can't believe gold is moving down. On Monday, Trump announced on social media that he is removing Cook, citing his administration's allegations of mortgage fraud, a move that has fueled concerns over the US central bank's independence. It's independent, but there's still people running that. You know, you can put all the nice labels on it, but it's still people running these organizations, and people are not perfect. You know, so this is gonna be quite interesting. And fuel concerns over US central bank's independence. Man, wait until Trump puts in his puppet. Then that's gonna really fuel concerns over US central bank's independence next year. But this is crazy. He announced on social media that he was removing Cook. Sheesh. Imagine getting fired over social media. Well, of course, these are high-profile jobs. Still crazy to call someone out like that if you're the president. Spot gold reverses earlier losses. Last 0.5%. Okay. Man, look at gold right now. Oh, man. Now it's attempting to move down. I hope we get like a massive fake out over here. And the next candle just opens up like this. Like this, and then closes, and then just does that. And then we just start to pump it. That becomes like a liquidity grab. Powell, just like I said, send in a chart. Send in a chart. Because, you know, in trading, if you just say sell, I think it's going to sell, or I think it's going to buy, that's fine. But how does the trade actually look? Where's the stop loss? Where's the entry? Where's your profit taking? You know, trading is more than just getting that short-term direction correct. Just put in your whole trade. Guess, yeah. Temu Powell was right. Yeah, but you must put in your analysis at least something. Oh, you can't even just say the numbers. Say, okay, my entry's here. I don't know. Oh, I have my wick strategy confirmation now, so it should move up. Yeah, I hope so. Because now this is just going to be waiting again. You know, if it comes down, now we got to wait. I got to wait. Because, you know, with this London session, chat, I'm still very cautious. I'm very cautious with it. I'm very cautious with it. So I'm waiting for more proven, like, direction from the market. So don't get caught in choppiness. You see, like, this choppiness? There's little sideways movements. Man, yesterday I got stuck in so much sideways movement. And I just ended up taking some sells here and there. But what I was truly waiting for were buys the whole day. But I got a few sell confirmations here. I got another sell confirmation here. And then I finally got my buy. And then it's like, oh, okay, so that was my buy. But it didn't play out. It played out. It was a profitable trade, but it still came down later. And then to again move up during the New York time. So quite a rangy day yesterday that was. And today I'm kind of like looking at a similar thing, but let's see what happens here. There's definitely a clean move or a setup. A potential setup here. So if you're a seller, you got sell potential. If you're a buyer, you also got buy potential. Now it's just a waiting game. How many trades did you take yesterday? I took about 3. One small win, one loss, and 1 win. The main trade was a buy. And today so far I've just had 1 buy. So let's see. Can get a second buy? Gotta be happy here. Fundamentally speaking, today we are not looking at anything important. We have Macklem speaks, but that's Canadian dollar. USD news, so we don't really have much of anything really. Yeah, so that's good on the... Oh man, I gotta remove this position. There's nothing here. Yeah, so that's good on the fundamental front. Hey, Cowboy Doctor, good morning. Morning, guys. Morning, Brian, Ellie, Woods in the chat, Derek, Ricardo, Luke. Morning, guys. So who else we got here? Illust. Explorers Fantasy. Aiden Ross. Got Aiden Ross in the chat. Isaiah. What's up, Ria Shad? Jay. Good morning, guys. Oh, man, like gold is just... It's correcting, man. It's just correcting. Why is it correcting? We could be moving up. Instead. Now it's looking at a correction. And it's a pretty nice push so far. Actually. See how big this range here is. Range here is like, okay, quite a decent range. Man, such a big push. It might be coming down, let's say, towards like... I don't know about the 65% mark. It's pretty far off. Maybe somewhere around 3365.50. But it definitely has some legs here. It has some legs. Now, the only thing about this trade is if I start to see it slow down, that's going to be quite interesting now. It slows down and then starts creating that structure. You know how London consolidates? Creates that structure and then starts to come up. Break these highs. That's going to be the next thing. But yeah, so far it looks pretty good. Breaking below support. A little bit of volume coming in. Gonna wait for us to get back into this area over here. First time, Mr. Woods, don't call me Temu. Dun, 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 dun. See, first trade. Break of the lows. Close below the wick. Fail to break the highs. Consolidation 1 minute breakout. So main reason was if it breaks out of the consolidation first, then moved up and failed to break the highs and come back down and close below the lows, giving confluence to move down. The 3 moments are very important to confirm the movement. Oh, right. Yeah, that's really nice. The 3 moments are very important to confirm the movement. That's true. A sell above last resistance and TP on the 5-minute support. Yeah, you got candle close below here. I guess you're expecting volume to come out of this accumulation area over here. A little corrective move. Prices is kind of moving down as well. I'm not entirely sure the full picture. Looks like price was moving down, corrected, like had a pull back up, consolidation. Basically, it's what happened here. It's basically like a similar idea to what's happening right over here. It's same but different. Like price are coming down. You got accumulation. Now it's candlesticks are breaking. You didn't get the closure, like a very clean closure, like the one you did here. But you got the break of that accumulation for price to continue pushing down with volume. And that's what you got over here. Sideways, and then price came down and then pushed down bearish. So yeah, pretty good. Pretty straightforward. This would have actually been a very fast and easy trade. Like literally all the London had to do was do the opposite. Like that's all it had. It was a 50-50 chance. It was a 50-50 chance that with the London open we would move down or we would move up. It just needed to do the opposite. But it chose the latter. It chose the latter. If you wanna take a shopping, buy a ladder that's red. Y'all seen that? Never mind. Never mind. Let's focus on candlesticks. Let's focus on candlesticks. So make sure you send in your chart work so we can see what your ideas are. If you're taking any sort of positions. The doctor, you're now level 10. You've earned intermediate level 10 role. Let's go, sir. So you got a pretty decent buy over here. We got a buy above resistance. Candlestick. Okay, so your entry was here. I don't know if you're waiting for the break of these highs. I think that would have made more sense. Because price was so close. Price was so close to breaking that high. You could have just waited for price to break that high. At least be sure. Remember what happened to me last week? It was so close to breaking the previous daily low by 2 pips and then reversed. So it's like, if you have the option, I think it's always a good idea to just to get in a little bit later. At least you get that confirmation, be on the safe side. But yeah, very nice trade, man. Very nice trade. Price broke above. Continue to fill up the range. Beautiful little clean PA over here. Awesome. Got W's. We got Marcel back in here, sending in that chart work. I'm back. A quick 1.5% trade. Let's go, Sui. SL to BE and securing around 30 pips. Nice trade. Awesome. Oh, this was like okay, so this was like Asia session. This was after the push up, and then you got some kind of a sell here. Damn, holy. Oh, you got the full sell. Like this was a fake out that came back into the range up until London open. Got buy here. Okay, awesome. Man, this is an excellent trade. This makes a lot of sense over here. So you're just trading, it seems, just the clean ranges themselves even. In a sense. So basically what happened was took a buy as price was breaking above these highs and then secured some profits and resistance. Took the next buy. Quite aggressive plays. You know, worked out here for you. So we got a buy here to here. We got another buy from here to here. Waited for some structure. Got in on a market fade. Entry from here to here. Man, just completely killing it. Holy. Look at this. Even scaled out partially. Scaled out partially. Dun dun. Okay, so you got like 2 positions on. I mean, like, so you're scaling out. Your plan is basically to scale and to hold just a little bit longer, it seems. So it's like you scale out, you hold just a bit longer. Really nice. Yeah, this one, the range was already kind of like filling up here. Awesome. Man, you just call it a day after that. That's fire. I salute you, sir. Let's see. Now this is why I want to see price come back into the range. Oh, I have my wick strategy. Okay, yeah, this was that. I hope now the price can just come back in here, consolidate, and then end up breaking the highs. And it's gonna probably break the highs in not this hourly candlestick, so there's gonna be quite a bit of waiting here because this candle has to close first. So I guess maybe on the next hourly candle, unless we just get crazy volume out of nowhere, like for example we get just some kind of candlestick start to move up like this, and then you know we're gonna quickly already be coming up there. Imagine all it takes is just one moment like this, one candle like this over here can shift the whole game, and you know from waiting 30 minutes you're gonna be like already in a potential trade, because the market moves pretty fast. You know, every time you want to relax or go for that little small break, that's when the move happens. That's when you miss the move. You're noting how the 30 will close? Look at this nasty barcoding here on the 30 though. Like pure sideways movements, not enough room. I'm anticipating that this is going to become like a small little liquidity grab underneath here. So I want to see that thing pull back up. If there's any direction I'm confident in, is the buys for sure. My question is whether if we come up here, it's going to be kind of tricky. Whether to take it off a 1 minute or a swing entry model. Because it's like a big accumulation. But if we come up here, we could actually set something else up on the 1 minute. For even a tighter stop. And it's a question of whether we get in on the 1 minute or we get in on something a bit more with a bigger stop loss. Somewhere around here, you know. I think I'll opt for the bigger stop just to be safe, because I do want to see the price play out. Because sometimes it's like when it's an obvious trade, the market knows everybody's looking at that trade and then it can fake out. You know, it does a small little fake out first and then moves in that direction. If it's a pretty obvious trade. But GJ here, daily is 0.05%, no real trends. We're still below 200 level all the way up over here. So yeah, nothing too interesting on pound yen as always. But a really nasty PA over here. Looks like it's consolidating again. It reminds me of what GJ kind of used to be like. For the most part. This is how GJ used to be like for the most part. Like really low volume. But of late, it definitely has been opening up a bit more. It's been a little bit more decent. Look at this massive sell-off over here. This happened during the New York session. Beautiful little accumulation. Respected the highs, started breaking the lows, and just completely nutted. See this? Price came down. Boom, boom, boom. Corrected this move as well. Right here. Corrected some of that move. But obviously the market open first had to take out some people. You see, the market's not your friend. It's gonna be looking to take you out. A lot of the times there's a lot more sharks in the water than anything. As you see, it still corrected this move, but it made sure that most people were taken out here first, and then to continue pushing up bullish. Sometimes it's really nice though. Sometimes there's no shock and it actually does what it's supposed to do. So here it was pretty good. It respected the highs. It didn't break the highs. Otherwise, what you'd have seen instead was a candlestick. If it was always manipulated, correct? Like, why not do this? Think about it. Why not do that? That wouldn't hurt. Let's take out some of these sellers. And then continue to move down. Wouldn't hurt to do that. But obviously, you know, the market has to pay people. They can't always manipulate people. That's a difference between now a losing trader and a profitable trader. A losing trader is always in the market. So the market is the one who is disciplining those people mostly. And then it pays the patient people. So that's why Warren Buffett says the market's an instrument of transferring wealth from the impatient to the patient. So most people, they're impatient, so they're gonna get caught by the shock most of the time. And the patient ones, you know, the less you're in the market, there's a higher probability you survive. You survive longer in terms of those liquidity grabs. So, you know, you stick to less trades, you get a higher win rate, if that's what you want, or more chances of being profitable. 1 or 2 shots a day, I think, you know, that's pretty good. So let's see, we're coming back into the range here. This range is worth about 120 pips. 120 pip range, kind of a big range. Coming in heavy, because I think the main direction is the sell. I mean the buys. That's why, like, even with these sellers here, I was just looking at it. I was just thinking to myself, man, this would have been a trade that I could have taken, you know, because the thing is, like, when you notice the market's behaving a certain way, you also have to adapt your strategy in a certain way, so that you don't get caught in these fake outs. Because, you know, sometimes it happens to me. Like, there was a moment, even sometime I think 2 months ago, where the pre-London time, exactly at the time that I was trading, there was always a fake out happening. And it was so hard to avoid that fake out. And it would be exact same time that I'm trading, there was that stupid fake out that used to happen. So it's like you notice these small things about the market, and then you have to adapt to it. Like, that's why I've been a bit more patient with my biases and just waiting for my bias for the London session. At least let me just get my bias. And that's the thing. If you don't fix or you don't remedy those issues, they're going to keep happening to you over and over again. So that's the market. As much as you think like, oh, you have a good strategy, that, oh man, you know what you're doing. If you're losing, you have to really evaluate like how you can adapt that a bit more. No matter how good you think that your strategy is. Because if you notice some bleeding, you gotta see how can you reduce the bleeding. So there's always a difference between normal losses and bad losses. You know, you're gonna take losses. It's part of the game. You know, but there's a difference between good losses and bad losses. You go to the gym, Vic? Yes, sir. I had a nice little session yesterday. Very nice. Yeah, nice little hack for the gym, definitely, because I cook my own food and everything. So man, a pressure cooker is just amazing. It makes everything so easy. Before, when I started like my initial gym diets, like, you know, gym diets could be quite hectic to actually make for yourself, especially because you got to learn how to cook, and you got to learn like all the nitty-gritty about protein intake and all of that stuff. But man, a pressure cooker and an air fryer makes it so easy. So easy to do meal preps. Man, before I used to fry that chicken. I used to fry it and all that. You barely use any oil. Like literally almost zero oil that you use for cooking when you're using like a pressure cooker or air fryer. Man, before I used to use like pans, and like, you know, sometimes it splashes all over the place. So hectic. It's like learning to trade. You know, every time you start something new, it's like it's always gonna be messy. That's why I say, you know, you gotta break a few eggs to make an omelet. You know, you're always gonna start messy, whatever it is that you start with initially. You know, but I think with time, it's just the same thing with anything. With time, you just get better at it. And then it gets easier. And it's like second nature, you know, it's like, it's that easy. That's the thing. And, you know, that was my challenge. Like, my most recent challenge was gym. This was something that I've been recently trying to master. And I finally mastered, like, the cooking process, the dietary, the intake needs, and the workouts themselves. But man, it takes time. But you know, when you approach something like with that same mindset that when you're going through trading and you get on the other side, like everything just is kind of the same thing. Because you realize like this is how it was in the beginning, this is how it is in the end. So you kind of like approach everything the same way. So you already expect it to be difficult, and then that's what you're expecting at the end. So you see, that's that mental model that you need. Like some people, they're just expecting it always to be so easy for themselves, like right off the bat. But nothing's easy right off the bat. It's definitely going to take time. And man, that took me months. That took me months to do that. That was like learning to trade almost. Not going to lie. It was like learning to trade. And you know, and you're still kind of learning every now and then, like small little things. Shit, like everything takes time. If you start something for the first time, give yourself at least, I would say at least 6 months to be above average. At least 6 months to be above average. You know, especially if you're putting in the work. Putting in the work and researching, doing your due diligence. Literally, you guys can achieve anything in like just above average in 6 months. I would say 6 months to be pretty safe over there. Like something that requires commitment. Hopefully gold copies ya and starts to pump price like its weight. Yes. Yeah, hopefully it does. It's just like, wait, sir. Pushing it up so hard and then bringing it down so easy. You know, like building a business, so hard. But to ruin your business is so easy. Building an account, man, so difficult. If you want to destroy your account, so easy. You know, that's the difference. That's literally the way life is formed. That's the structure of the universe. Like everything good is going to be hard. Everything easy is going to be usually bad for you. So you got to be careful, you know. You got to be careful how you approach things in life. That's why they say sometimes it's too good to be true. If it's too easy, sometimes you feel like it's too good to be true, and it's true. Sometimes it is. Take the hard path. The hard path is definitely more rewarding and sustainable. So you see, like the hardest thing that you can do here for today is to wait for price to break above 33.79. You know, that's the hardest thing that you can do, is just to wait. Because you see, if you wanted to rush a trade, maybe you could have rushed a sell already and then have price go back into the range. Now, you see, it was an easy thing to take the sell. The hard thing was waiting. You know, the market plays off human psychology like this. It's very intelligent. You know, it's very intelligent. It knows a lot about human psychology and what also people are expecting during major session opens like the London session. So I think all the time, even if you take a losing trade, the importance is you master discipline. And that's the real flex. The real flex is self-discipline. It's not to show off a fancy car or like some few results here and there. Real flex is self-discipline. So yeah, let's see now. Price is gonna push up here about 50 more pips. And once it comes up there, actually wait, let me put my entry just in case this thing does decides to skyrocket. I can never copy paste the freaking code, the numbers here from that alert system. They should code that. See, I think that stop loss is gonna be freaking huge. Yeah, damn, I need a better stop. Unless I just leave it inside of the range like this. I'm thinking like this, the only stop that I can actually put at this moment is just within the range. That's if it just starts breaking above now. So hourly looks like it's actually giving us the flip. That's insane. Look at the why the hourly candlestick just did the liquidity grab. Remember what I mentioned, like price can switch up in a moment like this? So it was either going to be the hourly to play around here, close bearish, and then move up on the second hourly, or this one could have just flipped. You see, now it's doing like a small little liquidity grab situation. So we got liquidity grab confluence, we got SMA in our favor, we got clean range on the left-hand side, we got Powell's bullish exuberance. So I think overall it's a pretty good trade. We got accumulation over here. We're gonna get distribution, stop loss within the range. If you think it's a bad trade, then you're just a hater. Because I think, you know, this makes a lot of sense. And when you take trade, and the more sense it makes, it's always the higher probability. You know, it's always a higher probability trade, because a lot of people are going to be looking at that move. Because people want to get into these moves. If we're expecting price to continue going up today, you're going to see like people obviously want to get stuck in. And where's the best place to get stuck in? It's right here by 33.79. Because once price starts to break above here and you get that next distribution, you've missed the train. You know, price would already be in that distribution. Then you got to look back at it and say, oh, that would have been nice to get in when price is moving sideways, not when it's moving up like this. Correct? So I think that makes a lot of sense. Price has been accumulating here for like basically the whole time. This was since like Asia, broken at Asia, and now with London open confluence, I think without volume, we can continue to move up bullish. View BTC. Yeah, we're gonna look at Bitcoin. Bitcoin had a crazy dump recently. What did that say? Someone unloaded was it 2 billion? $2 billion. And then Bitcoin dropped like $4,000 in price. Crazy. That was a crazy dump. Oh, GJ analysis. I'm waiting for gold here. Gold should be breaking up anytime soon. Get that breaky above. I'm 1.5% up today. Awesome. Nice to hear, Woods. Let's go, sir. Man, that hourly flip looks crazy though. We got 15 minutes, 30 seconds, a little liquidity grab. Damn, this thing, if it breaks above these highs, I think this is going to be a skyrocketer. It's giving skyrocket vibes, especially because of the hourly, you know, it still hasn't had its move. Look at the volume of the body of the candle over here. It's a pretty small body, so it's not had a move. It's just been reacting off levels. That's why you get the wicks, but the body is still small. Let's see if we can get that bullish continuation. I hope it just doesn't spike through this level like crazy, because sometimes, you know, price, I haven't seen this happen like in a very long time. I can't remember the last time I saw it, but usually when moves are very obvious, sometimes it can just like, it can do quite a big spike because you got a lot of limit stop orders here. So it creates like some slippage for the broker. I haven't seen that happen in a while. The last time I saw that happen was like on a sell idea on gold. Like I'd been waiting for that sell for such a while. Man, and when it gave the entry, when it broke the wick, it just dumped like, I don't know, 20 pips or something. Impossible to catch unless you get in prematurely. Wicks do the damage, bodies tell the story. Yes, sir. That's true, because you see, like, if you go on the 1 hour time frame, you see this? Now let's go on the line graph. There's no wick. So you see wicks do damage. Bodies tell the story. Wicks do damage. Here, body tells a story. So it can be unfortunate sometimes when you get stopped out and then just look and it's just a wick. And then the bodies were still closing where you wanted them to. But you know, that's the name of the game. If there was no shark in the water, then trading would be like really nice. They're too good to be true. Contemplating whether to just stop executing because I was 3% up yesterday and that then flopped to a loss over trading. Yeah, I think you gotta have rules for yourself. Of if you're gonna have a daily target, you can stop trading your daily target. But yeah, prices coming in here. About to get triggered in. Want to see price break these highs? The hourly is flipping quite nicely. It just needs to break. It needs to break the small hourly resistance over there. So close to breaking. Not yet. 2 minutes. 2 minutes pulling back. It's going to create a support, which I also don't mind if it creates a support because we've been moving parabolic 1, 2, 3, 4, 5 candles in a row. It's just the hourly candlestick still looks fresh. You know, it still looks fresh. We got that 8 SMA on the hourly to help push this candle up. Got about 11 minutes for the candlestick to close. So you see the true intention of price action when the candles are about to close. So you see what it did right now? It just basically grabbed some traders. It's now doing some psychology work on them. You know, sometimes people get in a bit too early or they get like triggered by a buy stop. Maybe the broker can trigger them. Something like that. That's typically what I decipher these reactions as. That's how I make sense of these reactions. It doesn't mean their trade is bad or, you know, anything. It's just like they could have waited a bit longer, at least to be a little bit more sure about the break. Because if they were waiting for that break, now something like this causes them to close positions, pay more commissions once price rebreaks the highs, and, you know, maybe even close out in a small loss. There's a lot of things like that, which I guess you kind of pick up on over the years when you realize like what kind of bad habits that you used to have and what the market seems to like to look at as being a profitable thing to do. Because, you know, the market's also like a business, right? It has to find ways to generate profits. So you can generate profits like this off people's mistakes. And you know what they say, you know, if you don't do it right the first time, you're going to pay double to do it twice. So you always got to do things right. You got to do it right. Take your time when you do something so you don't have to do it again. I would have loved to see that close bearish though and then create a support. Because, you know, the idea for this trade is price is supposed to break above and keep moving up. If it triggers me in and it comes back into this range, that just means that now the move is coming at pre-New York. Most likely. And then London session is just going to come back into that range where we've been and consolidate there longer. So I would say this is a pretty good option as far as options go for catching a trade during the London session. Even the 4-hour candle flipped. Oh, nice. Very nice. I like. JC, thank you for the sub. Saying this because RSI 1 minute was so overextended, and it's normal for this to happen. When this doesn't happen, normally it breaks, comes down to drawdown, then moves up. Now we have better chance of having a better move up. Oh, nice. Yeah, you see, like, you gotta make sense. You gotta make sense of these moves based off of your experience. You see, because I don't use the RSIs. Look, I can't see anything with the RSIs. Just the same way with strategies. If you don't use a strategy, you never really see the strategy. So it's quite important to focus on what you focus on and not get too distracted about other things. Because your experience will shape you. You know, it will shape you, and eventually you're going to build your own sort of perspective. Because you're going to have to choose a path. Because in the beginning, you're going to have many paths to choose. Eventually, you got to choose one. And that's a path that you should ideally be sticking on. Because you don't want to go all the way and then realize that you chose the wrong path, and then you're going to be like, damn, I wish I chose this other path. You know, that's why life, you know, in life, you make decisions, you make choices, and you don't look back. You choose your path and you don't look back. It will kill you to look back. You know, and you won't enjoy the journey anymore if you keep looking back. You just have to make the most out of the decisions that you've made and see if you can kind of like make it for better. Because there's always a door. Just because you chose one path doesn't mean there's no more doors to open. There's always like some doors to open, which can lead to greater things. That's a beautiful thing about choices. So don't worry if you feel like you're getting it wrong. There's always value that you're getting through that journey, you know. And that's why I always say, like, when students come into TFX concepts, I don't want you to completely abandon everything that you know, because that could still prove to be your edge, you know. That would be your edge. Coupled with TFX concepts, I think that could give you a really good edge. Buy looks nice here. Yes, sir. Now it's like pulling back a bit. I got my finger on the trigger. Can now relax. But, you know, we have a price coming down. I want to see price create a support and then to continue pushing up like this. And I think that's going to look awesome. Then I'm going to take a trade over here. It's going to be a good trade. And then we're going to move over to the next session. And that's the most stress-free way of trading that you can do for yourself. But now we also got SMAs coming in. We got SMAs, dynamic support within the stop loss range. That looks pretty good. Let's see if it can give us some more confidence. It would be nice to get like a little support area like this form first. A little support, and then maybe even a liquidity grab. Not entirely necessary. I don't know if that does much for the position, but if you got like a small little liquidity grab, or even price just moving up like this, creating that support, either way I think it's fine. But this is my most favorite part about before executing a trade. This is my favorite part, is when price is really close to my execution, and then I can kind of monitor those additional like icing on the cake, right? Those additional things that it does before triggering a position. Because it's quite important. Like right now it just looks slow, but anything can happen. It could still do some potential structure, some liquidity grabs, does a liquidity grab, candlestick closes bullish, and then you're like, damn, okay. So this is now starting to get interesting. What is it really trying to do? What is this? We got a sell, entry and exit. Man, I missed this MT5 over here thing. I missed this MT5. Looks so good. In and out. Is this guy any good? No, I'm not good. I am not any good. So now we wait. Now we wait. But this has proven to be actually quite a long month over here. This is 33 trades. It feels like a long month because this month I didn't expect to take too many trades. Because July was crazy, you know. July we did like 51 trades. So I thought this month we're going to relax a bit. So, but so far we've done like a little bit. Yeah, it's quite a bit of trades over here. But that's how it is, you know. It's like you never know. Some months you just get less trades because there's just no options. Like you see this month I did about like 26 trades, which is just like the proper average, around like maybe 25 trades. But some months you just never know. You never know what the market can give you. So that's why it's important not to force your entries as a trader. Like if you're trying to do challenges, that's when challenges kind of mess you up because you have like an idea of how many trades you want to take, and that kind of throws you off, like just what the market is providing at that moment. So you end up taking like a lot more shittier trades. Kind of like yesterday. You know, yesterday was a lot of consolidation. I'm quite happy the third trade played out because the third trade was almost like an overtrade because price was overall just not going anywhere. But I think it was also a pretty high probability trade because price had not gone anywhere. So it eventually had to go somewhere. And the pre-NY time was a high probability time for anything to happen. Much like a buy on gold right now during the London Open, it's a pretty high probability time with volume. That price, if it's going to correct this move, it has the right ingredients to make that happen, you know. And there's no bank holiday today. Got a clean range. You got loads of confluence here, loads of fundamental work that's currently in play. I'm just going to keep my stop loss within the range though. I'm not going to use that support because I still feel like if it breaks these highs, it could still take out that support. Little liquidity grab before it moves upwards. Because remember, the market's not your friend. So it's also good to be cynical about things because it looks pretty calm now. But I'm already planning for potential liquidity grab below these lows. So let's see if we can re-break these highs because we got people who prematurely got in. Not saying anybody in the chat, but just generally speaking, when price comes very close to levels like this, people can prematurely get in because some brokers actually break those wicks. Some different price on different brokers maybe have even broken above that high. So we can avoid this unnecessary drawdown and wait for that additional confirmation. Umar, thank you for the sub, man. For sure, and we have a liquidity grab on the 15, looks good. Yep. I just pray that gold does not range. You know, that's a freaking problem with this time. It's like this stupid ranges. Like we need the follow throughs, and this is a perfect like situation for it to follow through. But you see, it's right now broken into the sideways channel, so we've got the liquidity grab at least. So that's a difference in variable. The variable shift here is now we've actually had a liquidity grab. That should show the direction now above the highs, so price can continue moving upwards. And it's a pretty good move because you don't have to think a lot. Remember, like usually your best trades are the ones you don't have to think a lot. So it's pretty straightforward. Everybody's looking at it. Use futures chart. They never fake break wicks. No, I just use FXCM. FXCM is pretty good. It never fake breaks wicks. Sometimes I even see on my brokers breaking that wick and FXCM is not even moving. I'm like, what's going on here? Yeah, there's a lot of nitty-gritty things that happen in the trading world that, you know, it's not fair. It's not a fair environment. My broker screws me as well. I see them take my profits. But, you know, it's okay. You know, what can you do? They give you leverage and they give you access to the markets. It's like, what can you do? Before you had to have at least like $10,000 to become an actual trader. Now you can trade with like $500, $1,000. So, you know, it is what it is. It's kind of unfortunate though. They make a lot of money. Because sometimes I get more profits, I close and they keep some profits, and it's quite a lot and it builds up. Yeah, sometimes they give me shittier entries, you know, but it is what it is. What can you do? You can't really do anything. And if you're chasing a perfect broker, it doesn't exist. I think it's just because the environment is just also like very technical. Like owning a brokerage as well is also very technical. The communication with liquidity providers. Who are these liquidity providers? What's the most affordable routes? Like give people that service as well. There's a lot of things to consider. So for me, it's not important. It's important for me to make money. That's all that I really care about at the end of the day. If I'm hitting my profit targets and there's not too much other problems when it comes to withdrawals and that sort of thing. Or like freezing terminals. All right, so price is starting to do it. Price starting to create that support for us now. Let's see if we can now start to re-break these highs. Push up here for us. Hourly not really decisive. Yeah, the hourly is about to close here in about... Oh, it closed. It already closed. Okay, so it created like a support. Created a support there. We need some shark to come in and say, all right, time for gold to move. And then they're going to press a buy and they're going to move price. We need a market maker like that guy from Bitcoin. The guy who sold off 2-point-something billion Bitcoin and pushed price down. We need someone to come in like that. Get us triggered in. This is how I imagine institutional trading is, chat. So if I trade at institutional level, you see the difference between this price and my entry. Yeah, it's pretty small. It's an affordable liquidity grab. If you think price is going to move down, then what I imagine it's like they can they're market makers, so they can make these small little jumps, and that's gonna trap someone else on the other end, maybe a different institution, and they take a buy, and then you quickly start dumping the price. Because you don't need to, it's not expensive to move it from, it wouldn't be that expensive to move it from here to just above these wicks. Especially if you think that someone can get trapped in there. And if it's worth the play to fake them out to sell it off. Because you're going to squeeze them out. And they're going to panic sell. Alright guys, so I just got in here. Looks like I got triggered. Let's see, hourly. That looks good. At least we got a small little bottom wick there on the hourly. It's time to re-break the highs. So notice this is an area. Markets come like a few times before. We had 1, 2, 3, 4 tests of this general zone. But on this go, we've broken it a bit more. A little bit more. So it's showing to us that, you know, it's trying to break above these areas. So now I'm just going to have to wait. Play this thing to play out. That's why I chose, at least I have a little bit of a wider stop loss inside of the what do you call it, inside the accumulation zone. That way I can try and avoid any unnecessary like dips below here. But you know, we're always trying to look like how we can even reduce the stop loss even more. So we'll see if it creates us that structure that we can reduce this hopefully by like 50%. We'll see what the market does. At this point, you know, there's not much you can do. It's only controlling the risk. You can only control the risk from this point. So that's it. You know, the hardest thing is getting stuck in. So I would say this has been... Yeah, I would say that's it. That's it. Followed my rules over here. Gotten stuck in the way I should have gotten stuck in. Now waiting for that follow through. So hopefully London can stop playing around this zone so that we can actually start playing within this area where I would believe most of the profits would lie above this zone and not this area. Because this is just like a major, that's just a major consolidation down over here. It's a little bit more choppy to trade. Yeah, the hourly has the tiniest bottom wick. Come on, where are the buyers at? Should see more of a reaction off that zone. These are the follow-throughs that I'm looking for. So notice price shoot up here, accumulation, and then shoot up again. Nice little SMA cross as well. I mean, you know, good trades usually just go in your direction, but it doesn't mean too much that it doesn't go in your direction immediately. Because you'd also had similar situation like price here. It broke these lows and immediately went into profit, but that one reversed. This one break the highs and immediately go into drawdown, but you know, it can still play out. See, now this is where it becomes interesting, because the only way this thing comes down at this point, I would say, is if the buyers are not confident with their position. You know, but I would say if I was going to choose between a seller and a buyer in this market, the buyers definitely should feel confident. They should feel a lot more confident than the sellers should do. Like selling here at the break of the highs. Got a 5-minute candlestick that's about to close here in about 40 seconds, 47 seconds. You know, the thing is, we've actually already had 2 liquidity grabs towards the lows. Price broke below here once, it came up. It broke here below another second time, and it came up. But we haven't really tested these highs. This is the first time that we're actually giving like a little bit more of a significant break above those highs. But isn't it now just the distribution that happened? That's why I'm not in this trade. What do you mean? Like this push upwards here? I would say this was more of like a V-shaped reversal. So there was no even real structure to get into this unless you're just expecting a fake out. It's like a V-shaped reversal that left a wick behind. Maybe you could make a case for this small one over here as price broke above, and that's distributed. And now it's accumulating orders. So we could still see like some liquidity grabs happen within this zone. Maybe even it could fake out these sellers over here like this. Grab the orders and then continue to push up price. Oh, we got 380 people here today. Awesome. Welcome, guys. Welcome if this is your first time. Welcome, welcome. Yes, it can range. I think best change it's to get 1 minute consolidation breakout from the top. See, my perfect setup for 3% risk will be 1 minute consolidation breakout into 5 minute shotgun. Oh, that would be nice. Yeah, I love that one. Consolidation into shotgun. RSI above 50. Where's RSI now? Guess we have it all. Love it. Here we go. Oh, but we haven't got the shotgun yet. The shotgun has not yet closed above 33.78. Would have been nice for that candlestick to close above and then re-break the highs. But yeah, we have not yet closed above that. We need price to close over EQH. Come on, guys, run up the likes. I would appreciate it if we can get the likes up to like 100 likes. Pump the likes. It will pump the market. Pump it up. Remember, guys, manage your risks. Don't take risks that you're feeling emotional about. If you're feeling too attached to this trade, that means your risk is too big. You know, your risk is too big. Or there's something that you're doing. Come on, pump it up. Hey, Scarface Clips, thank you for the sub. Yeah, but it's kind of like a slow start into the move. I was actually expecting something a bit like faster because of this like previous hourly liquidity grab over here and the way we flipped back bullish and then started re-breaking the highs. Really expecting something a little bit faster movement past this point. Could it be the hourly thinking about creating a bottom wick? Like a much larger bottom wick. Because, you know, it's like 45 minutes. This hourly candlestick is at 45 minutes. So it has plenty of time to still create. Because if you see it in hindsight, you're just going to see if the hourly moves up here, it's just going to look like something like this. Right, so it still has plenty of time to create those lows if it wants to create a low there. Really slow progression. It's consolidating here. It's accumulating, getting ready for a breakthrough. So we'll see what this was right here. We'll see what this was. This little wick above. This is a little accumulation. If you're not yet in and you still wanna be sure about the move, you can still wait for the wick break above here, 33.79. Because that would break again if it's supposed to keep moving up bullish. So do you like 2 pips from entry? We're at a point where a lot of candle have not closed above. Yes, sir. We haven't yet gotten a close above here for sure as well. Definitely. Let me see what's going on here. Let me move my position a bit. From here to here. I want to see a continuation from this little move up as well. Like right here. All we need is just like one of these 5-minute candles to regulate. You know, even look at the size of this one right here. Just need one of them to start regulating. You got 13 minutes for that 30-minute closure. The good thing we got 30-minute SMA as well over there. Dynamic support, hourly SMA. Man, beautiful little kiss of death there with the 4-hour time frame as well. You know, with the 4-hour candle reflipping, the 4 hours already created 4-hour lows. You know, we've already created the 4-hour lows. And we would like to see, because, you know, it's 4-hour candle only has 1 hour, 42 minutes left inside of it. If we could get a wick fill situation off this 4-hour, off this zone right over here. And then continue with this sort of like bullish momentum. Look at the size of this 4-hour candle from that Asia session. No bottom wick even. Moved up about 453 pips. Or rather, this was the move from Friday, Freaky Friday. And then with the Asia session, this was the one here. It moved about 354 pips. Yeah, 4-hour looks bullish. All time frames right now are bullish. Daily is bullish. So it would make more sense for us to continue moving up. If we don't move up now, as I mentioned, then what's going to happen is price is just going to range. Because you don't know, like, if you're planning on catching a move like this, there's certain key times when that move plays out. You know, it's either going to play out now or it's going to play out pre-New York into New York Open to catch a move like this. So that's why it's like when I give my trade a shot like this, I'm really expecting, because it's a high volume time. Just an hour and 18 minutes into the London Open. It's still a high volume time. So those are the times these moves are going to play out. You're going to look at your charts and see when volume typically comes in. Then you're going to have a probability of when volume comes in. The highest probability ones are definitely pre-sessions into session opens. Typical swing, we have to wait. Typical swing. Oh, 14 seconds for candle to close. Hopefully it doesn't close like a doji. Creates a little bit of... it's harder to read the candle if it's a doji. Okay, at least it closed some body over there. It's created a support. Recent gold market was really weird. Always pump with news. Yeah, exactly. You know, that's what's been happening since Powell's been speaking over here. Friday pump. We got new news where Trump said that he was planning on firing somebody. He had the Federal Reserve cook, and then, you know, price moved up again. So I want to see price move up. It makes more sense for it to move up. I don't like the way it's struggling so much, though. Like, slowly trickling down. It's a slow bleed. What I'm still anticipating it is liquidity grab creating an hourly low. A much stronger hourly bottom wick before reflipping. Because it's just the same way as this hourly candle. So even if you look at this, okay, it actually created already a bottom wick. A more solid bottom wick here. Because if you look at that previous hourly as well, this hourly was all the way down over here the whole time. It was only towards the end of the closure of the hourly that it pulled all the way back upwards. This one still has about 38 minutes. Come on, Goldie. Don't go back into the gulag. We're literally breaking out of the gulag. And now you want to come back into the gulag. What's wrong with you? Small little head and shoulders there. Remember, drink more water, chat. Kiss of death now on hourly, so hopefully that turns into the Xauusd. Yeah, hopefully that flips. Still got to get through some certain levels there. It still has to get through those SMAs. See, still bouncing off that hourly SMA there. Just in terms of dynamic support. The 5 minute, 15 minute. Let's see if it fakes these guys out. Because now we've got two people in this position now. Two people have been triggered in. So now this is going to be interesting. You've got the sellers over here. You see this reactions? You've got the sellers who are looking to sell into that clean range. Down over here. See, trading is all about probabilities. You got sellers now been triggered in to fill this range. That's what they're thinking of, a corrective move. And you got the buyers up over here expecting price to go upwards. So now I would say, at least from my perspective, the market has all that liquidity that it needs here at this point. It can choose which side to burn. That's the way I look at it now. It can either burn the sellers or it can burn the buyers. Because we've gotten two significant wick breaks. If you look from a structural perspective, significant wick break down here, significant wick break up over here. So that's a question of like, you know, who even feels more confident about this overall idea here? Like if you take a sell like this, let's say if you're a seller in the market, would you feel nervous about now this trade going into drawdown? Compared to if you take a buy, the buy going into drawdown, it's like, which one do you feel like more nervous about? Which one is going into drawdown? Because if this starts to move up like this against them, I'm pretty sure they would feel more entitled to close positions, because we all know what's moving the gold market right now. We can see that the buyers are really predominant here in the gold market when we see like massive swings like this. So it's like a bit of psychology now. So you see that drawdown, maybe it's gonna feel a bit different for the sellers than it does for the buyers. So that's the way I look at markets, basically. But then there's always a silver lining. And what I think that silver lining there is sometimes the market just does what it does, correct? It just moves based off of its own rules. And that's why I always tell people, like, watch that movie called The Big Short, and you're gonna see what I mean by this. Like, you can have all the analysis and everything that makes 100% sense, but then the market will just not do it. And then, you know, then you dive into conspiracy theories of how the market's been really regulated and whether if any of this is real. But, you know, we can't talk too much about the boogeyman. So from just like a way of making sense of it, that's kind of like how I look at it now. It's just going to be purely between the buyers and the sellers. Buyers up here and sellers down here. Based off of the way I look at markets, my entry models. Because my entry models, they help me catch these trades sometimes as well. You know, if I see, for example, that I want to buy and I see my sells got triggered and that was a bad idea for a sells and my buy entries are still confirmed and it gives me the buys, then I'm like, okay, perfect. Ranky, thank you for the sub. Hopefully this is a fake out in the 1 minute. Yeah, I assumed like the reason it's coming down. That's why I also said like a much bigger stop loss, at least here or something would be better, because this support could still be getting taken out for price to move up, because, you know, sometimes you get these liquidity grabs before the actual moves. So I'm assuming that that was the one right below here. So now it's taken what it needed to be taken. Triggered both buyers, sellers. Now we're just gonna wait. I think you see, that's the silver lining that I'm talking about. Sometimes you see the market, it can still, even if there's a lot of buyers here, it can still do what it wants to do and say, okay, no, it makes more sense. Let me first trigger these guys in, and then we're gonna have them both in the positions. So that's the silver lining that I'm saying. Because, you know, a lot of the time people put too much emphasis on volume and these types of things, like volume indicators and all that stuff, but it's not 100% guaranteed just because you can see volume in the market that the market's gonna behave in a certain way. Jessica Tate, thank you for the sub. What's up, Durga? Sorry, just a waiting game, you know, just a waiting game. No emotions. I feel like the more you understand something and the more you try to understand something, you act less emotional. Because you see the way my thought process is right now, maybe if you are trading alone, you'd just be thinking about that as a loss. Whereas I think you'd rather be thinking about, like, in terms of how is price actually moving? Could I have done something differently here? Is this something that I can actually learn from? So what I'm actually going to do is, for this trade, I'm going to actually reduce my stop loss. I'm now going to take this opportunity to reduce my stop loss. So let's see, from 57.5 pips, we're going to reduce it to 40.5, because at this point we shouldn't be coming down there again. Yeah, at this point we should not be coming down there again. And you see how that works? You see how risk to reward is subjective? Because now we're being more flexible in the market. So on this trade now, I've reduced my risk, I've cut down my risk quite nicely over here. And now this becomes a position. Awesome. No emotions. We learned something new. We reduced our risk. What better way is there to trade? You know, now if you're too focused on just a winning and losing, then you're going to either win or lose on this stream and then mentor hop. You're just going to be stuck in the rat race. You know, you're going to be in square one if you keep doing that even 5 years from now. You'd not have learned anything and you'd be trading more based off emotions than anything else. Simple. Now we wait. Because that was a liquidity grab. Like, if we re-break those lows, at this point, I don't even want to get involved in this market anymore. Because, like, if it's not giving me my volume and London is notorious for ranging, then, you know, why stay in this trade? Like, for me, because most of my trades don't even last this long. Why stay in this trade if it's still giving a hard time? Because now, look, we've even closed above resistance. Finally, we've even finally closed above resistance over here off that 5-minute closure and broken the previous 5-minute high. So now we even have a shotgun entry, a potential shotgun entry over here. We just really need to get through that wick by 33.79. And, you know, it's pretty, if we get through 33.79, that's going to be an accumulation break from this zone. So remember what I said, guys, sometimes price accumulates next to key levels. So it has volume enough to break those key levels. So, you know, you could even consider this an accumulation breakout at that point once it breaks above that high. That will be the final nail in the coffin here for price to move up. Break above 33.79. So if you're still not in the trade, you can wait until you break above 33.79. You know, the difference in pips is only about like 2 pips. Let me do instead this and then do this. Put this line here. And then do this. That. Oh, yeah, guys, it's free to click the like. We got 400 people watching. Don't be stingy with likes. It's so easy to click a like button. So easy. Doesn't even take that long. You know, just click and forget about it. Would appreciate it. It does help the stream out. And I get it, guys. I also, when I watch YouTubers, I follow people religiously. I don't always click on their videos, even though I love their videos. But, you know, since we're growing a community here, it would be nice to promote with the algorithm a bit more. Come on, Goldie. Break above 33.79. God damn it. It's really struggling with that break over there. So close. Look at this. Literally 0.6 pips. Stop playing with me, Goldie. I feel a lot better if you break those highs. Yeah, I think it's going to get it. Two more minutes for what? Oh, even got the 30-minute close above resistance. Come on, Gold. You already had your liquidity grab. You had your 5-minute liquidity grab. You don't need the 30-minute liquidity grab, Gold. You have enough buyers in here. We want you to go up. We support the idea that you can go up, Gold. You don't need the 30-minute liquidity grab. It's like it's thinking about it. It's like, oh, but we could take these lows here. You don't need it, Goldie. You got that little SMA over here as well that you'd like have to go through. Gold been killing me the last 2 weeks. Just multiple stabs in the back. Yeah, I mean, so far, it's been okay. It's been okay. Like, so far this month, I'm up almost 30%. You know, and begin, like, towards the middle of the month, that's when price really started opening up a little bit more for me. And in the beginning, there was a lot more speed bumps. You know, we had like a little bit more speed bumps, lost win, lost win, lost win. Then it starts to open up. So this is the thing I'm talking about. Like every month, I have situations like this where my P&L can open up. So I'm always just looking forward to these times because I know there's going to be harder times and then easier times. There's always harder times like this. Oh, look at this crazy back-to-back loss. 1, 2, 3. You know, win 1, 2. And then comes like the little bit easier times. That's what consistency looks like. When you're consistently applying, this is how it actually looks like. And then sometimes you just get easy. You know, you just keep doing your thing, and then the markets just operate beautifully. And there's not like there's not a lot of fake outs and that sort of thing. But that's what consistency looks like. You just have to stay on it. Even because if it's a proven system, just stay on it through the good times and the hard times. Yeah, but you know, so far they're pretty good over here. I think this is pretty good. Pretty good. And now candle is finally breaking above 33.79. The weird thing is there's still like very low volume. So I was actually expecting more of a push up over here, but this is really nice to have as an additional confluence because that means there's another entry that's been triggered up over here as it breaks the highs. 5-minute closed without top wick. Oh, I got a top wick here. On my broker, no top wick though. See, I don't like it struggling so much. Yeah, exactly. That's how it looks on my broker too. But that's why I mentioned, like, you see now what's happened is also the sellers have been taken out. Remember what I said about this move down over here? High price. Now, this is when the market can really screw everybody. So I'm just giving you my insights on how I look at markets. This is now the point in the market where it can screw everybody because it's taken out the sellers. And now if it wants to, it can take out the buyers and then nobody wins. You know, so this is like when you're telling the story of price and how we've been reading it this whole time and reading the candlesticks, I feel like that kind of helps you better understand the way markets operate. It helps you stay a little bit more stoic in terms of these movements over here. So, you know, sometimes it's like that. Sometimes it's like nobody wins and it is what it is. So right now what we have are the sellers have lost. Now we have to wait and see if the buyers could win this and take this. So you really start seeing market more from a less emotional perspective and just more of technicals, which it should be like that. If you take a loss, for example, now, and you start playing the victim, then you've lost the plot. You know, you're losing the plot because that's going to happen to you again. And it would help if you were a little bit more detached to your positions to stay in the game for a long time. But we've taken some of that stress off over here by reducing our stop loss. Would be nice to get a 50% reduction, but in this scenario, price didn't give us a 50% reduction. And it's just like, you know, when we do our simulations, what we typically expect from price once we reduce our stops. So that's exactly what's happening. So make sure on the WAP database that you go through all those simulations. Then you're going to see that what we talk about in the simulations is like similar thing that's happening now. And just think of it like we're doing a simulation, basically. I think that also helps. But yeah, that's it. Brokers win, that is for sure. Yeah, brokers always win. It's a good business model, eh? Brokers always win. Are you Canadian? No, sir, I'm not Canadian. But gold is a boot. It's a boot to go up here. It's a boot to skyrocket. It's doing a small little break and retest now. Yeah, small little break and retest. Break, retest. Come on, Goldie, skyrocket. Skyrocket. Leon Davis, thank you for the sub. Yeah, I'm happy. I'm happy for this trade. I'm happy for this trade. At the end of the day, you just must look at the trade. So when this trade is over, you're going to look back at it and say, I followed my rules. This was destiny. It was destiny that I took this position because I was meant to be on the charts at this time following this specific set of rules. That was destiny. Everything else is just going to be like, what if? You're going to be like, oh man, I should. You see, right now you're at break even. If you don't feel comfortable, get out. Get out. If your rules tell you to get out, get out. You know? Because now you're going to, you know, the worst thing you can do to yourself is pretend like you could have done something differently that was outside of your rules. Because you're going to look back at this moment and going to say, oh man, I should have gotten out of break even. I should have done this. No, you couldn't have done that because you couldn't have planned for it. So that's the thing. You're going to protect your psychology. It's the most important thing in trading. You don't want to play the victim and say, oh, I should have, I could have. You know, that doesn't exist in trading. For me, I see, okay, I executed, I reduced my risk. I see another additional confirmation over here. I should hold. I should hold. That's it. If I do anything else, that's going to be mismanaging the trade. And then I'm going to play the victim. Daily candlestick is up 0.42% too. Next 15 goes above and closes, creating support at the high before bouncing. It's done a small little break and retest off of that level. So you see a candlestick broke above, closed bearish, and now it's trying to re-break the highs. Honestly, I'll be surprised if this trade doesn't work out because it's just moving so slow right now. I'll be honestly surprised. That would just be a Judas. That would be such a Judas thing for gold to do. To come back into this range to break out again during pre-New York time. When we have the volume, we've already been consolidating here for like 90% of the time. You see how big this range is? It's a pretty big range. We've already been here for so long. You know what Judas thing to do is to break above, give a small little break and retest, break of the previous highs to only come back into the range. Especially after taking these sellers out over here. Taking the sellers out to do this and to come back in. I just gotta wait until price at least gets to like 33.75. Then I can be sure that we're actually back in the range. I want this 15 slightly red, then bounce on the next. Wouldn't mind slow and right. The problem is slow is never really a good thing. Usually slow is some kind of like struggle, maybe some indecision. That's what slow is. Hey man, how about after the news today? And do you have any idea on the news? Let's see, news. News today, we have no news. What news are you talking about? The only news that we got was the one for Trump firing or planning on firing that Fed. And that's what moved price up during the Asia session. But besides from that, yeah, there's nothing. There's no news over here. I mean, maybe consumer confidence, something you're looking at, but I don't really pay attention to this. This is an orange folder as well. And that's happening like much later into the day. I'm not on the charts during this time. Actually, from 8 a.m. That's going to be the New York session open. I'm not even going to be on the charts. So I would say news-wise, nothing too much to worry about there today. But you can keep an eye out for consumer confidence. But really nothing too much. Tomorrow we have nothing as well. You know, it's a pretty clear day here. Wednesday, mid of the week volume. Then we have unemployment claims on Thursday and core PCE price index Friday. Yeah, I think that's it. FOMC member Waller speaks too. But that's it. I think what you have here is yellow folders. Oh, okay. There's no even yellow folder. So this is the next news is coming at 8:30. That's going to be 30 minutes into the New York session. This trade's actually turning out to be a slow one. Let me go to Okay, so there's an offer on TradingView, guys. If you want, there's a flash sale going on up to 80% off. Offer ends in 5 days. If you're thinking about getting a TradingView subscription, pretty nice offer going on there. Is gold... Wait. Am I going to win this gold buy position that I'm in right now? Or is price coming back into the range? Let's get our fortune here being told. Cleansing deck. Oh wow, this is taking quite long. It usually doesn't take this long. It's really thinking here. It's really thinking about this trade. Okay, finally. Let's go to the middle one. Alright, so in essence, your gold position is poised for a triumph. But tread wisely, for the path may still waver. Your gold position is poised for a triumph, but trade wisely. The path may still waver. It doesn't really give me a good answer, that is. Because I know it's poised for a triumph. The setup looks good. I've already managed my risk, so there's nothing more I can do at this point. Just have to wait and see it play out. Longer dated US Treasuries shares tumble as Trump Fed battle hits up. Let's see. Long dated US Treasuries and stock futures fell on Tuesday after President Donald Trump said he was firing Federal Reserve Governor, an unprecedented move that fueled investor concerns about Fed's independence. Yeah, and I think it's good because, you know, Trump is a guy who likes to, he wants the US rate cuts. He wants the US rate cuts. We saw gold move up, so I think it was a good sign. World stocks edged off this month, record highs with focus on US market after Trump said he was removing Lisa Cook from the Fed's board of directors, citing alleged improprieties in obtaining mortgage loans. Let's see, since he took office, Trump has managed to get his way on most things he has turned his attention to. That's true. So he's gonna get his way with these rate cuts. He's gonna get his way with this rate cut. So price should move up. Trump has regularly threatened to dismiss federal chair Jerome Powell, and earlier this month he fired a top Labor Department official after accusing her, without evidence, of manipulating jobs data that had disappointed him. Let's see. Trump, who lacks the legal authority to fire the Fed chair except for cause, has backed away from that threat as Powell gets closer to expiration of his term next May. He knows Powell is not going to be around for too long anyway, so he's okay with like stepping down for a bit. But he really did attack him in the beginning. The move is another example of concerns of the Fed's independence weighing on the dollar and has implications for the potential makeup of the FOMC going forward. That adds to rate cut prospects and softer dollar outlook. So, you know, I guess if this trade doesn't play out, then, you know, just gotta try again during pre-NY, because everything here is looking quite bullish to me. We are heading into budget season, which is why... Okay, there's French sell-offs, nothing too interesting. Fed drama propels gold. Briefly, gold kicked off Tuesday trading, riding a roller coaster with its passengers, gold bugs, scrambling to hold on the rails and figured out what's happening. The precious metal touched a 2-week higher right under $33.90 per ounce before erasing most of the session's gains. Political drama collided with central bank chatter and a choppy US dollar. We're gonna go on to our currency strength meter here and see how the dollar is doing. We got a little bit of dollar strength today, actually. I was expecting maybe this would be a bit weaker, but it looks like a little bit of dollar strength. But that correlation is definitely a hit and miss. That negative correlation between DXY and gold spot. I think this is the longest trade that we've been in this whole month. Just want to know your thoughts. Your trade almost done in short time, Vic. Why don't you close your trade at this point? Because I've already managed my risk. You know, so I'm not emotionally attached to the trade. I've managed my risk. The fundamentals are pointing bullish. So for me, it makes sense that price moves up. You know, so if it takes a while, maybe it just takes a while. Worst case scenario, it's not such a bad scenario here. So I just kind of want to see it play out. But definitely was not expecting this though. I was not expecting it to be stuck in that range for so long like this. But you see now it's hovering over here. It's really debating whether to keep moving up. You see it's spending most of its time on the upper half of the consolidation. Instead of just tapping it and coming down, this time it's really contemplating whether to move up. And we're about to get the new hourly open there as well, which should be in the next 7 minutes. Gold just forming liquidity. Don't like this market condition? I feel you, John. I had to take 3 trades yesterday just to get my actual trade. Because the market condition was ranging, so I had to take a couple of trades as I was waiting for my actual trade. Which came during pre-New York. Still holding that SMA over here. On the 5 minute. The thing is, it's doing this little whiplash thing that price action tends to do sometimes. It's like it breaks highs, then it pulls down. It breaks lows, then it pulls up. It breaks highs, then it pulls down. So it's a very choppy condition. It means there's just no follow through. It's quite unfortunate that there's so low volume here at such a key area in the market. See, as we're breaking these highs, it wouldn't make sense for it to come down to break these lows here again. Especially if you're you know, the thing about the market right now, it hasn't paid anybody off. It's mainly just taken out sellers. That's all I can pretty much say, because that's the only structure. Or maybe early, like tight stop losses here for buys as well. Tight stop losses. It's just been taking people out. It's not paid anybody yet. We're going to only see the payoff if price starts to move. Either moves like this, kind of more with some volume, or moves like this. Then you're going to look back at it and say, okay, you know, that was a payoff here. But how could you have realistically caught either one of these whilst avoiding everything else that happened previously right here? The only other way usually is if maybe you come onto the charts a little bit later and you just so happen to have avoided them. But there's certain ways that the market can make it very difficult for anybody to make a profit. So now we're coming back into the range. It's just crazy. We already like broke above here with 2 5-minute candles. Rebroke the highs of the resistance too. Is selling an option? Yeah, but that's the thing. If you're on the charts, there was a sell option here, but those sellers got taken out. So selling maybe would be an option, is to resell. You know, it would be to resell if it breaks below these lows again. Resell, and then for price to correct maybe some of this move on the left hand side. But that's, you know, that's like over trading as well, because it could just break those lows again like this and then pull back upwards, because that's what it's been doing. Oh. It's just a one of many trades. Okay, so if you're new and you're still looking at a mental model towards taking these trades, just think of it as one of many trades. You know, because you still have a whole, you know, whenever you start a month, for example, it doesn't matter if you start with losing or winning, because you still have a whole month of trades ahead of you. Like, for example, you start a month and this is your first trade of the month. That's one out of, let's say, 35 trades. You know, so that kind of like should remove some of the pressure that you put on each individual trade. Just think about it in terms of the longevity of the amount of positions you're going to be taking. Because it can be very easy to get caught up in something like this, and emotionally draining as well. Especially when trades take really long. I wish this was like software FX. Just push the next candle to see the results. Yeah, and that's a nice thing. It's less emotionally draining on software FX too. You can just push next candles, and then you see when you're backtesting, it's also different because you're not emotionally attached, right? So you can quickly see, oh, okay, so if that worked or if that didn't work, and then quickly go over to the next idea. So you see a situation like this, all right, manage risk, next, and then off to the next session, pre-New York. Damn, what is this Goldie? We've been sitting here in this range. It's like a 44 pip range. 1 5-minute candlestick can be equivalent to this whole range we've been sitting here for basically an hour. 1 5-minute candlestick. I've taken partial profits. Oh, wow. Such a Judas. Alright, so that's it. Anyway, manage risk on that trade. It's not happening until pre-New York, guys. That's it. Gold is just gonna range in here. See that? There's no point even holding it anymore because prices, it's coming back into the area. So all you can do is manage risk of that in this situation and come back the next session. Yeah, that's it. Like also consolidation break. The same thing. It still broke. Still broke like consolidation. Back into the gulag. How has no top wick? So be careful. Oh, hourly? Really tiny top wick. I just cooked up in a range. See how it's like wicking like this? It's quite interesting because you remember like the examples that we're showing you of PA over here? How it broke the highs, came down, broke the lows, came up, broke the highs, came down. Insane. It's the same thing that's happening on the 1 hour. Basically, so it's still stuck in a range. But we were just about trending though. We're up like 0.42%. So see how I broke these lows and see how it breaks these highs, then it comes in. So no one really makes money in a market like this. Majority of people are gonna lose in this environment. Like I'm talking objectively speaking. I'm not talking about just because you took a sell and you got a profitable trade. Objectively speaking, most people are gonna have a harder time here because there's no distribution. And now the only way the sellers here can have a good sell is maybe if they re-enter off the break of these lows. But that's definitely like overtrading. And if you do that in a long period of time, you're actually going to lose more than you win. Like if you give yourself more second chances like this in such a short duration of time, you actually lose more than you win. So this is all from the data that I've gathered. I've really thought about all possible scenarios to improve even my own hit rates. And that's what I've just noticed. The best thing usually to do is just to move on to the next session, to stick to maybe 1 or 2 trades a day. That's the only way. Move my stop loss to break even, close some profit. Supposedly console breakout setup done in a short time. Oh, yeah, exactly. Yeah, your best trades are done in a short time. Are you Christian? Yes. Let's see. I just want to say, let's say I've taken partial. I'm up but not happy. Why? Because I broke the rules, got lucky, got paid tomorrow. May not be the case. Yeah, lucky trade. You never feel good about a lucky trade, right? You never feel good because you can't replicate a lucky trade. So for me, I prefer to just not get lucky, and if I do get lucky, I never feel good about the trade. And I just try and make sure that does not happen. Because all of these trades, I don't think I don't believe I got lucky on any one of them. These were just trades that I took really thought through trades that I took. And it's true, like if you just stick to taking 1 or 2 trades a day and you're actually journaling your trades, you actually build a connection with all of these trades. And you're going to know which ones are the dumb shit trades, those trades that you over risk. Those kind of bad trades, you're going to know which ones those are. Those are going to stand out to you. Usually they're going to stand out especially when you have like back-to-back losses. There might have been something that you did, or it could have just been the market condition. But I think on this day here, see a consolidation. Yeah, I don't know. I think this was just like the best thing to have done on this day was to maybe not take the third trade because I was already down like 3.80%. But I think the good thing about the third trade, at least that was a very small loss, 0.35%, even though I used like full risk. So, that was still like a very good managed trade. But the best thing to have done maybe was to not take that trade. You see, and you can learn a lot from the data that you gather. Like you see on this trade, this is the best thing that I could do for this trade was just to cut off my risk because price is not moving. And then I give myself more space. So if I give myself more space, there's a higher probability the next trade can be a W. But if I don't give myself space, there's a higher probability that the next trade is going to be another loss. And you're going to start building up those clusters of losing trades. You see what I mean? Like, for example, now let's say you take a sell over here and you're like, okay, so maybe it's done now. And then look at this, back into drawdown. So that's the important thing about giving your trades space in between ideas. So you don't get caught in this choppiness. Because it's not me. It's not FX Gbpjpy took a bad trade today. Oh, it's a losing trade. No, it's just a market condition. It just didn't move up. It's literally faking everybody out here today, clearly. So there's very few things you could have done to get a profitable trade within this range. Because, you know, we still waited for price to actually give us some confirmations above here, which was breaking candlestick highs. And also candles were closing above resistance with like beautiful clean range on the left-hand sides over here. So I think there's always that aspect to it. Any chance we get gold back up? Yeah, we're gonna get like maybe in the next, right now it's 5, maybe in the next hourly candlestick opening, or within the next 40 minutes. Basically the next hourly candle opening. That's when gold is gonna attempt to break back up above here again, and you know, maybe we're gonna give it a second chance. You say pushing around 3,400 before selling? 3,400 definitely is a daily target. That's where I'm expecting price to go. Is 3,400 over here. That's about 239 pips from where we're currently sitting at right now. So it definitely is going to be the next target. But this is hard. Like even if it skyrockets up now, it's too early for me. It's shaking out way too many people. It's like a salt shaker over here. It's gonna shake everybody out, and then it's gonna move. And you know the good thing is that it doesn't always happen like that. Like sometimes that happens, but then if you get another trade somewhere around here, you know it doesn't always happen like this way. It shakes everybody out before a move, and those are typically your good moves. That was one long painful trade. That was the longest trade this month, yes. But it happened recently, also yesterday to me a bit, like here. You see, I was kind of on tilt. I was actually kind of on tilt because it kept showing me my entries, my sell entries. And then you see this trade, it just went against me. Over here, wait, where is it? It was such a good trade. I thought this was gonna really melt off. And then it started to go into drawdown. I'm like, what the hell is going on here? I was like, what the hell is going on here? This is such bullshit though. Like when the market does that, it's the most annoying way to lose position. You know, like when you're waiting for a buy, because my main bias was buy and it keeps giving you the sell. You know, and then this is that pre-NY time that I'm talking about now. So we had to lock in for this. This was now pre-New York, when the volume that I'm talking about is coming into the market as well. And then now we finally got the buys. Finally got the buys. So it happens, chat. It happens. Like, you never know which trade. You see, the thing is, like, you never know which trade is going to be a winning and or losing trade. Maybe that's something that some people think that people know, but you don't know. We don't know when the next trade is going to be a winning or a losing trade. I have no idea. But you just have to trust in your system. You just have to believe. You know, without belief, you can't move forward. You just have to keep putting in that work, believing in your system, taking your trades, keep showing up every day. Stop playing the victim. Stop, really stop playing the victim. Like if you're still playing the victim of this trade, you're forgetting that you have such a long journey ahead of you that this is going to be meaningless. You're literally going to forget about this tomorrow. So just focus on the next trade. Don't think about revenge trading right now. Just think about you've managed your risk. You've done all that you could. And now you just got to try again another time. Because we're all in the same boat. Trading is a very lonely game. And we do it behind our computers without really seeing anybody else. But at the same time, you can take comfort in knowing that we're all in here. We've all seen these opportunities. Even if you can't see these people taking their positions, trust me, we've all seen these opportunities, and that's why the market's operating like this. So you're not in it alone. You just have to be differentiating yourself from the people who just keep losing. The ones who have losing streaks like this are the ones who are always to revenge trading. Who are always trying to revenge trade and get back at the market. Do you use one position size for every setup, or do you... I adjust the position size like very slightly, but it's always between either 1% or like a 1 to 5%, maybe maximum 2%. But it kind of depends on the setup. But it's within this range most of the time, 1 to 1.5%. Like you see this trade that I took, I think I was at 1.5%. 1.5% risk. So instead of losing $750, I lost 360. Yeah, like 360. In wise words at Dave, we are alone in this together. $760. It will go up again. I think 5-minute FEG filled. Hey, but thanks for the likes, guys. Appreciate it. Let's freaking go. What y'all think? Maybe it's consolidating again to break above. This is a hopeful. When you're in hopium, you're always thinking that the next move now is going to be the real move. So you're going to take a sell here, it pulls up, take a sell, pulls up, breaks its highs. You're really hoping that price is going to move up. It pulls down. But you got a small little accumulation that's going on here though. After this little extension that we had previously up above, little sideways movement currently at play. There's a small little accumulation that's happening right now as well. On the 1 minute. Right here. Hopium. This is the most hopium area here, because this is usually when you're really forcing a trade. When the market's not moving anywhere. That can really mess with your psychology. Because what people usually expect is after if they take a loss, they're expecting that the next trade is going to be a W but without any resistance. So then the moment they take the next trade and it starts to show some resistance again, oh man, that's like, it puts you in a really bad place. A really bad tilt. So you start tilting, you start mismanaging, maybe you even decide to just close it there. The 15 looks like a grab. Let's see, 15. Actually, yeah, it does look like a grab. But the question is like, how many grabs does it need? Remember what I said about how it's looking at the grab of the 30-minute when we were up here? It was thinking about grabbing the 30. This is it now. There's a grab of the 30. But how many grabs does it really need? Like, when was the last time you see that the market needs so many grabs to make a small move like this? So to make a push up like this. Usually it's like one grab and then it has a move. But it's doing like multiple grabs. Especially if now you jump onto the 5-minute time frame. And then you analyze like how we've been analyzing the amount of grabs that's been happening in this small duration of time, considering the higher time frame grabs too. So like, how many grabs does it need? You know, it's a bit like, it's impossible. It's impossible to trade. It's too many. I will see if that was the final one. Right here. This is the final 15-minute grab to break above the highs. Because each grab kind of gives you a bit of hopium. You know, like when we were also a buy here, and then it did a grab down here. That gives you a bit of hopium. You see how this candlestick just starts to rush up? Then you're like, oh, that's a grab. And then it comes down again. And then you're going to be like, oh, no, that's a grab. And then you keep taking these trades. Let's see. I think right now the best thing is a paper trade. Paper trade now if it re-breaks the highs by 33.80. But the good thing is like usually for people who have not been able to take these trades, then they at least get their shot at a buy above 33.80. So that's a good thing for them. If they came in later and they can still get that move. But we're at a pretty high time of trading. Most people are already on the charts during this time. You see, this is a London Open. So it's like a matter of like surviving this. And here in a buy now. Let's go on today's trades. And say XAUSD sells. Like update this here. This is 73. 816 73. Okay. Awesome. I didn't exit it from the last trade. I would still say, probability-wise speaking, I would still definitely expect this to move up than to move down. I still believe the buyers in this market still have that edge of the fundamentals. So it's really nice for them. This I remember we spoke about, like if you're a seller or a buyer here, who would feel more confident when we were both in the trades. But the market actually took us both out, man. That's insane. It actually took us both out. Dude. And remember, we preempted this. I mentioned this before it happened. Because this is not the first time that this has happened. And it's going to happen again. So it's like, when you understand it, so much better. Because it's going to happen again. Every single trade that you take, it's going to repeat itself again. Whether it's a winning trade or a losing trade. And that's the kind of good thing about the market is when you approach it from that understanding point of view, it's like you don't play victim. Because you know it's going to happen again. So why would you play the victim? Why would you waste your time playing the victim? It's going to happen again. Just like your wins are going to happen, the losses are going to happen. And the way the losses and wins happen too. Because they don't always happen the same exact way. There's some small variables. So this specific thing happening here today. This has not happened to me. I can't remember when the last time this actually happened to me. This specific type of loss. But you see, that's the beautiful thing about experience. As long as you're on the market, on the charts, you kind of start to develop these scenarios, these consistent scenarios. Because the market only moves 3 directions, correct? So you're going to have a certain number of variables given for your strategy, what can happen to it. So that's the sort of experience that you're building. So now you got one, for example. Think of this as one situation. And you know, when you start breaking it down like that, you start looking at markets like patterns, correct? You're going to have to go through these patterns like every month and every market cycle, but they should remain consistent because now you're following like a strategy and a routine. We're bouncing off the 5-minute FVG. Look left. That's the thing, you know, it's like really look at your strat. If you're talking about FVG, look at those scenarios for FVG as well. See if you can have them in a system like this where you can see the variables of different things happening. You know, like this is TFX concepts. This is how I look at markets, basically. So this is how it can help with psychology as well. So it's not always just about the entry. It's also about what the different scenarios of that entry. Because, you know, when you talk about FVGs, most of the time you're just talking about an entry model. You know, it's just an entry model. Got an imbalance. There's a massive imbalance here on the 4-hour from Friday. It kind of got this range actually got filled quite nicely over there. You got some liquidity grabs on the 4-hour here too. It's all signaling like a sort of bullish move, correct? Like even look at this little minor one right over here on the 4-hour. You got this one here as well, minor one on the 4-hour. It's all signaling like price wants to move upwards. And I know it's gonna be a bomber clot trade today.
Bomber clot.
Really good feeling about that. I also got a few ones right here too. See, it's all like signaling to the upside. Now the question is like, how are you gonna ride it? Some waves you can ride, some waves you can't ride. Even the most experienced surfers fall off waves. You know, sometimes a wave can just have like a certain thing about that wave that makes it hard to catch. Gold is moving like DAX right now, except DAX came down and gold came up before the shitty movement. Oh, you got DAX. See what Bitcoin is doing? Bitcoin is up 0.20%. Looks like just some small retracement. Nothing major here in Bitcoin. Still far off the targets that we're looking here at 130. Off 130. Major retracements on Bitcoin. Let's see what oil is trading at. This like $63 a barrel. Doing a small little break and retest, it seems. Off the daily. Man, when was the last time we even did oil analysis? Well, it looks like oil has been coming down. That's one thing about oil. It's been slowly trickling towards the downside. But all eyes on gold spot, because this pair still has a pretty big move that is cooking up soon. Tetra, do you do swing models? Yes. Yeah, I mean swing, but not holding throughout the day, or like really that long, but just having a bigger stop loss, trying to catch some quick moves, like something fast. You know, sometimes we can have like even a 50 pip stop loss. For me, that's kind of what I consider like a swing. Maybe even 100 pip. I think we've even had 100 pip once, 90 pips, 80 pips. But you see, the thing about gold is it can play out those swing entries pretty fast. Like, you know, if you consider like this candle here, this is about, let's say, roughly like 40 pips. So imagine 40 pips, that's one 5-minute candle. If you get two like this, that's already that swing that's already been completed. You know, so that's how I look at swing. But I will not hold a trade over a period of days necessarily. Because why would you have to, you know? Like, gold already gives you so many good opportunities. Like, for example, if I took like a sell over here based off of like a consolidation breakout with a fake out confluence, this is part of my entry model. Let's say even I put my stop loss up over here, you know, about 37 pips. This whole drop happened pretty fast, and that's already a 1 to 3 risk to reward. But that's a pretty big stop loss. You know, in this scenario, we'd even put our stop maybe somewhere like this. Somewhere like this, that's a 1 to 6. So if we're doing really tight stops, we could use like 16 pips. That's already a 1 to 7. So there's no need to do swing entries like with bigger stops. And you can see that here with my data as well. So I'm not just cherry picking the ones on the charts, but you can see like how price actually tends to run. And some of these trades run a lot further than this. I'm just obviously not on the charts to screenshot them, you know, but like we have these positions, really tight stop losses, which just completely bleed. Correct. So it's just a matter of like holding the trade a bit longer, you see, but the pretty nice positions over here. So there's no need. There's no need. This is a good thing for me is because like if I ever find myself having like a hard time, I can sometimes just hold a bit longer. I can try and hold a bit longer. Let's see. Last time I did that was here on the 7th of August. I don't know. Maybe there's a video on YouTube for this one. 7th of August, 3.88%. And then sometimes you have these really obvious moves in the market where I held for like, you know, 6%. I held that one for 6% because the previous 2 days I saw exactly at that same time the price was skyrocketing. So this time I said, you know, with this volume that we're seeing, you see this? And these were all buys. With this volume that I'm seeing, instead of taking 2% like I usually do, I'm just going to hold longer. So that's how I approach trading. So I think, yeah, the system is very flexible. My system is very flexible. Swing systems are not flexible. Because, you know, a swing trader, like the ones that you typically think hold trades over days and weeks, they don't have the luxury of trading lower time frames. That's their problem. You know, their problem is they can never catch really a good entry. But for a scalper, we can decide to hold the trade longer, giving us a better risk to reward. A swing trader can't, because they're always going to have a big stop loss. And majority of the time, they really have to be on the right side of the market with the macro fundamentals to really get a bomber clot trade. They don't have that luxury. They cannot do it. You cannot catch a 1 to 5 like that easily off like a daily or 4 hour or something like that, because overall the candles don't really move that smooth on the HTF. They rather move that smooth on the LTF. So, you know, the people you see swing, maybe they have really big accounts where even a 1-to-1 is pretty nice. You know, like Tori trades. She's a swing trader. I think she's taken like 11 trades already this year. But those are pretty big trades. And from what I understand from her system, she actually sometimes even risks more than the reward. You know, so if you consider 11 trades in a whole year, you have to have a pretty good account for that. I think I'll come off the wave and wax my surfboard for the next day. Yeah, I think that's the best idea. Oh, you know, you can have some brekkie and then come back for the lunchtime. Maybe the waves are gonna be better later. Because right now it's like 5:30 in the next like 30 minutes. You know, hopefully the tide comes back in and we can break above 33.79 and, you know, price can move up again. But if it doesn't come back up here, then I think we're just gonna have to be looking at these just smaller moves that happen within the range. It's a 127 pip range as well. It's a pretty big range. Last question, Tetra. If Powell resigns, is this bullish for gold and Bitcoin? If he resigns, probably will be bullish for gold. Because Trump, as I said, is going to put his puppet in there. And Trump is going to control the next Federal Reserve chairman. I'm sure that's what Trump is planning on doing. because you know he couldn't control Powell, and when Powell leaves, I think that's what we're gonna have the sentiments lean more towards. Because you've seen it here, like Trump, even it says here in the fundamentals, Trump has gotten his way on most things so far. Since he took office, Trump has managed to get his way on most things he has turned his attention to. It's like if Putin resigns, yeah? Let's say if a democratic election and he resigns, Putin's gonna put someone else in power that he can control. So these are like, you know, they have similar kind of outlooks on power. Trump, Putin. You can see the psychological makeup of the guy. You know, it's not rocket science. So I think that's what the market will most likely be looking to do, is skyrocket. But you know, for Bitcoin, I'm not sure. Bitcoin is kind of weird because with Bitcoin, it's been moving the opposite direction. You know, even with Powell talking about these rate cuts, I'm surprised Bitcoin didn't move up. It just moved down. So that's also quite interesting. So I'm not sure about Bitcoin, but I'm pretty sure gold is going to move up. We're still looking at a 3,500 over here. All-time highs. And you can see how we're slowly gearing up to 3,500. Like we're slowly starting to push up. Like the macros are starting to line up a bit more. We just got to wait for those September rate cuts now, which is going to be on the 17th, which is the midweek of the third week of September. So it's going to be midweek volume on a Wednesday. On a Wednesday, people are going to be looking at their Bitcoin portfolios like this. And they're going to be looking at their gold, and everybody's going to be looking at their portfolios like that. Because now, you know, the stock market's supposed to go... Actually, a lot of things are going to get affected. A lot of things are going to get affected on that day. So hopefully Powell comes through with the rate cuts. In 22 days, 8 hours, 26 minutes. It's going to be like that. It's going to be like a meme. You know, like how they make fun of like traders on NFP, like getting ready for the NFP, putting on their tie or whatever, like putting on their suit or whatever. It's going to be like FOMC as well. Gonna wear a suit. We're going to wear a suit to the charts on that day. We're going to dress up. But it's really nice if you already have positions in the market though. Christian, thank you for the sub. See, like the same way like when Powell spoke. Man, on Friday, look at this candlestick here. This thing on the 1 minute time frame, it didn't even create a bottom wick. It just moved bullish. So when Powell came in, it pushed up like 100 pips. No bottom wick. 127 pips. And then price just went up. So suit up. Barney Stinson style. Suit up, Ted. We're about to go in for FOMC. Suit up. Man, it's such an awesome show this was. How I Met Your Mother. So it looks like eventually that the sellers got their sell positions here. They even got a small little head and shoulders pattern of your left shoulder, head, right shoulder. Price to come down, fill up this range down towards support. That's way bigger than CPI and NFP. Because it's so anticipated. Because the whole year, basically, that's been the topic. And now, just like last year, it's the same exact thing. Even last year, we got the rate decisions come in like towards the end of the year. So it's like a perfect Powell playbook. It's always the last, you know, like the real twists and the real twist happened towards the end of the year. That's why I kind of like to think about it. Like the real twist in the economy that happened towards the end of the year. But we'll see with this new guy that because you know with Powell we kind of like expect certain things from him, but we'll see with this new guy next year in May how his behavioral patterns are gonna be like. If it's gonna be more impulsive than Powell, if it's gonna be more random, because Powell is quite like you can anticipate him quite nicely. And all you need to do to anticipate Powell is just to think that he's not gonna change anything. That's when BTC crashed so hard. That entry was snipe. Yeah, this is a nice entry. Little SMA crossover here. But I think on the first go, you see, you could have like gotten stopped out on the first breakout if you're expecting a sell. That could have stopped you out. And then it did like a second breakout here, and it pulled up. Sometimes people have pretty tight stop losses. Maybe they got taken out, but at least it still respected the structure up over here, so it could melt and correct that move to the downside. So this is basically the mirror it corrected from here to here. It's correcting this move currently. So it didn't do it without a fight though. One pullback here, another pullback here. It did not do it without a fight. Maybe only if you waited for a candlestick to close and then break the previous lows. That would have been the, I guess, the option. So you couldn't have impulse these moves. Impulse entries were going to be losing entries for these moves. You know, so you'd have to wait for a candle to first close and then break the lows so price can continue to move down. But you know, in this buy scenario here, it's funny because even the impulse and the candle closure both failed. So you had candlestick close above, break of the highs, and it still failed. So that's why they say your best trades can also fail and your worst setups can win. Story of my trading life. Always remember that. Your best setups can fail. And I've always seen it. When it's too good to be true, when it's super obvious like this, man, those are like the best setups and the fail. And then the ones which are a little bit more riskier, those are the ones which are like usually having a higher hit rate. Talking about generally speaking, because a lot of people always talking about, you know, A+ setup, B+ setup. Like for me, generally speaking, even maybe you can say the B+ setups even have a higher hit rate than the A+ setups, honestly. Because those are the ones most people are afraid to take. Those are the ones, let's say it's like a buy here comes down and you say, oh man, I hesitated. Damn, I should have taken that one. And then price comes all the way up over here and then you take that one and then that's the one that fails. And maybe that could be the A+ setup. The market loves execution. It hates, it resents resentment. You know, every time you hesitate, man, the market hates that. It hates that hesitation. So that's when you're going to pay for that hesitation later with that second position that now has a higher chance of losing because you hesitated. It hates hesitation. It doesn't like when you hesitate. Just Blast, thank you for the sub, man. It hates hesitation. Have you ever tried to approach a wild animal and hesitated towards that animal? Or like you go to your friend's house and he has some dogs and you hesitate with those dogs? You know, the animal senses fear. It also senses like danger. Then it's like it's more prone to attack you rather than if you just approach it with confidence. So it's the same thing with trading, right? If you approach your trades with confidence, it's less likely to attack you. It's the ones that you hesitate usually are the ones which are the losing trades. But the ones you don't hesitate, man, those are the best trades. Those are awesome trades. So you see, like, if you come onto the channel over here, you can see some of these trades. So I try remove as much hesitation as possible. Like if you notice one thing about me, I'm quite impulsive with my trades. So you see, even with this sell, I was kind of impulsive with this sell, and I noticed the sell didn't play out. Then I'm kind of impulsive again with the buys. So I really try not hesitate as much. Like if it makes sense to me and if it's in line with my strategy, I'm taking it. You know, why not? And you're going to see this. You're going to see this a lot of the time. A beautiful correction here. This is already filled up like a, let's see, yeah, basically coming towards that 65% of the range has already been filled up. My favorite trades are the ones I get triggered, then go to do something and forget. MT5 notification on the phone says profit. Oh, nice. What's your daily analysis on USD Swiss franc? Let's see. I don't trade USD Swiss franc, but I would say, let's see, you gotta start on the quarterly time frame because I don't know this pair. Looks like it's coming down overall. Holy dollar weakness. Yeah, but the franc is pretty strong. Franc is pretty strong. So is a Swiss franc stronger than the pound? I would think it is. Swiss franc Gbpjpy. Yo, this pair should have some nice volume. I would say the Swiss franc is definitely stronger than the pound. But USD Swiss franc looks like obviously coming down, especially with a dovish attitude towards the dollar at the moment. I think if you're looking for sell ideas, those could play out pretty nice. I mean, look at these little drops over here. Massive drop during New York session. Big drop during Asia session. So what do you think is going to happen today? You know, I think there's a higher probability for a drop, just based off of what the US fundamentals are saying. Yeah, so I'll be looking for a sell, even potential sell here. You got a small little range. I don't know about 4.4 pips, but that's the structure on USD Swiss franc. Is if price breaks below these lows, there's a small range here down towards that support. I see we got some rejections over here at the highs, so you got some resistance right here, a couple of wicks into that level. See, 30-minute. You got like a little support area over there to get through, but it's clearly struggling at a level here. You see that resistance? We spiked above it once, maybe even done a liquidity grab since we broke the highs, and it's trying to pull back into this range. It's like a small little range that it's in right now. But definitely I would be looking more for sell ideas. And the daily candle is about to flip right now as well. It's gonna be an easy flip on the daily over there. But I can see off the daily though, the PA has been really choppy. Like look at how compressed and wicky this is. This is garbage. Man, there's so many whips that can happen in this area over here. So imagine if this was happening on gold. Man, if gold had this price action, it would be so hard to trade gold. If it was like really wicky like this. So if you guys notice something, the whole London session, there hasn't been a direction. We have not yet had the market say to us any direction. This was a V-shaped reversal. You're lying if you said you could have caught this move. You know, that's kind of hard to catch that move. You know, there's no structure. It's like a V-shaped reversal. Unless you just trade the opposite direction of price. And that's your strategy. You got a V-shaped reversal. Some people took sells over here, got burned. Got buys above here, got burned. So there's not been real any sort of direction so far in the London session. Gotta suit up. Suit up to the next session, guys. What about USD CAD? Do you think CAD will cut? Yeah, everything with the dollar. If dollar is the base currency, then price should be going down. Price on your chart, even right now, if you look at the chart, it should be going down if dollar is the base currency. Base currency. it will dump it. Oh, what's my pip settings? There you go, sir. No, no, no. The company around this community is really cool. Thank you, Joe. Appreciate it. Welcome, welcome. Remember to join our Discord, and you can send in you can send him some analysis in here as well. You can even send video analysis if you want. What do you think of this 1 minute setup for a buy if it breaks? If it breaks, yeah, I think you know, this is a point in time where it's like where I want to see one setup happen first, and then I'm gonna get like a good idea of what to expect for that pre and Y time. So I want to see what's gonna happen here first for this buy, whether it's actually gonna play out or whether it's gonna fake out, that I can get like a good idea of what to expect. Because if it plays out, that means maybe there's no more shock in the water, and then the next trade that we get can be like a very clean trade, you know. But if it fakes out, then I gotta be way more cautious about even trading this range. So I would say I'll just watch it, but definitely if we create like a support over here like this and then start to break above, I would be expecting a sort of a correction. It would look pretty good at that point, but now it's coming down. So we'll see then maybe even liquidity grab confluence as we create that next support and then break the highs. A little bit of clean range to correct on the left hand side. Also, the fact that you're at the bottom of the range is also a pretty good thing here as we're coming towards the bottom of the range. Then you can expect price to move up, you know. And the funny thing is, let me try and pull a video up for you so I can show you exactly. Remember what I mentioned about those scenarios? 1, 2, 3, 4, 5, 6, 7. Those different scenarios to understanding how your strategy or your entries operate in different environments. It's like when I say these things, I'm not just saying them to say them. So if you look at this is another trade that we took. So remember this trade? So the buy, it was pretty much the same idea. Same idea, price at the bottom of the range. We got that same 1 minute accumulation. Then we took a buy. So we can zoom in here. See this? That was that buy idea. And then price moved up. Yeah, price moved up. How much we secure here? Oh, it melted? Exactly. If you get those entry confirmations, then you're thinking about it in terms of this now. It's going to be this variable of your entry. But yeah, it's melted. Looks like it did not break above resistance. But it's coming down, you know. At least it's coming further and further down to test the bottoms. The bottom of this range over here. So it's even much nicer if it even happened down over here because it's fully at the bottom now. Fully. Arpita, thank you for the sub. Oh, nearly finished billions now, Vic. Thank you for that recommendation. Alright, wait a sec, guys. It should be back now. Alright, just had a small drop. We're back. Yeah, we're saying that billions was really nice. Man, that show kept me motivated to learn more about trading. It's arguably like the beginning of my fundamental research. When I started getting interested in fundamentals was also a little bit through Billions. Such a nice show. And if you like those types of shows, maybe you're going to enjoy the industry as well. The industry is also a really nice trading show that I haven't had time to finish it though, but I really want to finish this just to really see what it's about. But apparently this is also really nice. But it is like I watched a bit of it. It looks quite enjoyable. Alright guys, but I think I'm gonna head out here. I'm gonna see what the market says later on. See if I can catch another position. And take care everybody. If I leave you with a bit of analysis, I would say sells below support. Could be a pretty good shot here by 33.68. Beautiful range to correct down over there. But also the buy is not a bad idea here. So, you know, it comes down to like where price goes to next in the next hourly open over here. Whether it plays around here, or you're gonna have to catch a trade within these small ranges. And if you're trading that small range over there, there's like a kind of minor resistance here. If we can get above this resistance, then price can fill this next range here towards that next point. That whole zone is about, you know, like 46 pips. So yeah, that's about it. See you guys on the next one. Adios.
Hold me now, we bout to dip. My boy said this